Hello investors, welcome back to Be Wise, Money Wise. This is Divya and I'm an NISM certified investment advisor. In today's session, let's get started with another investment option which is bonds and debentures. Bonds and debentures are both fixed interest providing debt instruments. Although both these terms are interchangeably used in the Indian market, there are certain similarities and certain differences between both, which we'll see at a later part of the session. First, let us understand why are they issued. Sometimes companies go through liquidity crisis and they require additional funds either for the purpose of infrastructure development or expansion of company or acquisition of an other company or introduction of new product into the market. During these scenarios, they need to raise additional capital to achieve their goals and finance their operations. Many successful and large companies began as startups. In general, startups rely on investors to help them for funding purpose. And this is achieved either by equity financing or debt financing. In case of equity financing, additional capital is being raised by selling company stock to investors. In return for the investment, the shareholders receive ownership interest in the company. But when a company decides to go for equity financing, share dilution happens, reducing the ownership proportion of a current shareholder. But a current shareholder sometimes sees dilution as negative because it reduces their voting power and hence they might not be willing to go for equity financing. Debt financing can be achieved either by taking a loan from the bank or taking a loan from the public by issuing bonds and debentures. But sometimes the rate of interest that needs to be paid to the bond holders is lesser when compared to the interest on bank loans, as the purpose of any corporation is to maximize profitability by reducing their interest expenses. They prefer issuing bonds and debentures. Both bonds and debentures are fundraising tools for the issuer. This is a long-term financing, which means it has a fixed interest and fixed time period. Bonds are debt securities issued by the government or the public sector companies, whereas debentures are debt securities issued by private sector companies. So when you're purchasing a bond, it means you're lending money to an issuer. The issuer promises to pay you a specified rate of interest during the life of a bond in return for the loan. Interest payment will be done cumulatively or annually. Bonds are debt instruments usually issued by the government agencies or financial institutions, whereas debentures are debt instruments issued usually by the private sector companies. Bonds are secured by some kind of physical asset or collateral and hence they are not very risky. But whereas debentures are slightly risky because they are not secured by any physical assets. Because debentures are slightly riskier debt instruments, they offer a comparatively higher interest rate than the bonds. During the time of liquidation or when there arises a situation of bankruptcy, bondholders are given higher priority than the debenture holders. Bonds are non-convertible to shares, but sometimes debentures are convertible to shares. Every investment option comes with its own set of pros and cons, and in case of bonds and debentures, they are less riskier than stocks, and when held till maturity, they offer more stable and consistent returns. And interest rates offered on bonds are higher than the traditional investment options like FDs, RDs, and savings account. But ensure to invest on those bonds only if you have confidence on that particular business group. If you hold the bond till maturity, then your return is fixed. But if you want to sell the bond before maturity because of a financial crisis, it is quite possible to sell a bond to a buyer in the secondary market. But it's difficult to find one if prevailing interest rates are higher than the interest rate offered on the bond. Also, before investing in bonds and debentures, ensure to check the credit rating and opt those bonds which have high credit rating such as AAA, AA, etc. I hope today's video gave a fair enough idea on bonds and debentures as an investment option. If you have any questions from the current session, please drop it in the comment box and I'll get back to you. Please do like, share and subscribe to Be Wise, Money Wise. I'll see you in the next session.